Hi, good afternoon, everyone. Thank you for joining us today for our panel, Achieving Financial Independence, a Pipe Dream or Viable Goal. So we have with us here today some of the most engaging and influential voices in the personal financial space. These individuals aren't just sharing content online, they are also reshaping how we manage money and also empowering a lot of us to take charge of our financial futures. So let's meet our incredible panel. First of all, we have Mr. Chris Chong, the voice behind Honey Money SG, known for his clear and practical insights on building wealth in Singapore through budgeting, investing, and CPF system. Next up, we have Ms. Dawn She, better known as SG Budget Babe, a pioneer in Singapore's influencer scene. She has also written a book, Take Back Control of Your Money, that is available for sale in Kinokuniya and Amazon. Third, we have Mr. Kelvin Tan, the creator of Kelvin Learns Investing, who breaks down complex investment concepts into easy-to-understand content for beginners. And last but not least, we have Ms. Karen Fu Brittany. She's ranked #1 in Forex Singapore Nationwide Trading Championship. She's a Forex trader, investor, speaker, and author who empowers individuals to master both mindset and markets through her candid and motivational approach. So, as you can see, our panelists came from very diverse backgrounds, but they only have one intention, which is to bring financial independence and literacy to all of us. So, maybe let's dive into our conversation today. First of all, when we talk about financial independence, a lot of people will know this term, FIRE, F-I-R-E. What is FIRE? Financial independence, retire early. And what does it encompass? It means you have to save, and that means massive savings of at least 50 to 75% of your savings, and also be mindful of your spending. And last but not least, be smart about investing. So, maybe to kick off today's panel, we'll have Chris. He recently actually spoke at one of the podcasts to talk about FIRE, as well as how can you achieve Ikigai. Yeah, maybe you can start to talk about what is financial independence in your view, Chris?
All right, so this is Chris speaking. And when we talk about financial independence, we usually look at the money aspect, right? Like how much money we have and how our passive income is going to cover our expenses. But really, to me, financial independence is about the option and the freedom to walk away, to say no. Why? Because a lot of miserable people are in their miserable jobs and they want to walk away, but they can't. Or if you're a self-employed freelancer, there's a very nasty client. You want to walk away, but you can't, because you do not have that independence and that FI to walk away. So building the FI is very important. It's not because you want to get rich, you want to be the wealthiest person, you want to have the highest income. It's really about having the 底气, yeah? In Chinese, say 底气. English translated to maybe like confidence, the base confidence to walk away and say no. And I think that is being increasingly important as we see this year that there are so many jobs being laid off, right? We really want to have that 底气. So that is really FI to me, to have that confidence to walk away and have the option to say no.
And maybe, Dawn, you can also share with us, now with your new book, Take Back Control of Your Money. So how can we actually achieve financial independence?
So in my book, there's actually a chapter where I teach you how to calculate what is your financial freedom number. And the important thing to note is that this number will be different for everyone. You can be financially free with 1 million, 2 million, 3 million. What exactly is that number based on your situation and lifestyle? So there is actually a calculation to get there. And knowing that goal, then working backwards, we'll be able to actually figure out what steps do we get in order to achieve that goal. Because that's the same exercise that I did with myself and my husband. So we're very clear-minded on what is our number, and we're working towards that number while we continuously to grow our investments to get there.
Oh, that's good. Yeah, Kelvin has a very interesting background. He used to be a game developer. So from a game developer to a financial literacy content creator, how are we going to actually, what is financial independence to you, and how can we achieve that?
So if you actually think about it, there are a lot of policies in Singapore that are actually encouraging us to work all the way till old age. Not that I'm against it, by the way. So for example, like SRS, CPF, even our housing, all of it are geared towards us working for 10 years, 20 years, all the way until 60 years old. Then we retire. So if you are lucky, we get to enjoy the remaining 10, 20 years of our life. But if you are unlucky, we get to stay on the bed, having someone to wipe our butt. To me, that is quite scary. And I don't want to live that kind of life where I have to always listen to what people tell me what to do. So having the ability to achieve financial independence to me means that for once in my life, I have the ability to take control of my own life and not having someone else telling me how to live my life. So this also lets me prioritize what I want in life. So for example, it lets me spend time more with my partner, with my loved ones, with my kids, and also my aging parents, who probably won't be around. Okay, they are not dying anytime soon. They won't be around for the next 10, 20 years. So having achieved financial independence gives me that kind of freedom.
Yeah, that's true. I think it's important to know what you want in life and work towards it. And we'll actually hand it over to Karen. So Karen, you are actually a trading expert. And a lot of us are learning how to trade and invest. But to you, what is financial independence from an expert's point of view?
So that's a great question. Now, social media has portrayed to you that financial freedom, financial independence is all about, oh, you can just sit back, relax, sitting on the beach, do nothing all day. Now, if you look at the past 5 years, what are the proudest moments that you have? Is it the time where you sat at the beach and did nothing the whole day, watched Netflix, did nothing the whole day? I can tell that kind of lifestyle doesn't give you the satisfaction that you're looking for. What truly gives you the satisfaction when it comes to financial independence is the freedom to be able to challenge yourself the way you want it to be. Not what your boss wants you to do, but what you want you to do. So when you achieve financial independence, one thing that's going to make your life satisfying is to challenge yourself every single day. And then you look back last year, 5 years ago, and you'll be like, you know what? I'm so proud of myself. So I'm sure that you can achieve that kind of lifestyle too.
Actually, speaking about challenging yourself, is there like a magic number that we should work towards when it comes to financial independence? So Dawn, you mentioned about financial ratios, numbers. Is there a magic number that we should look for when it comes to passive savings or passive income or savings?
That magic number actually depends on each person's spending and their desired lifestyle. So I think that's why it's key to know what exactly is this number for you and calculating that. If not, right, imagine if you're always just benchmarking yourself with someone else. Say you saw that your ex-colleague announced he made $5 million. And you see your best friend say that they made $10 million, maybe because they exited some equity deal or something. And you'll be comparing yourself with them. You will never get out of this rat race, which is just always chasing the next financial number. I think the key thing is that there's more to life with that.
Right. So what do you think, Chris? Is there a number that you're looking at when we look at retiring?
Okay, so similar to Don, everyone's number is really different, right? Which number is really accurate? Nobody can really answer you. I could tell you that $1 million US by 35, that is the goal. But to some people in disadvantaged situations, it may seem like just a pipe dream to them. So I think it's very important that while you have a number, it's just a goal to work towards to. It is not a destination because life does not end after you hit your FI. So what are you going to do about it? Okay? Does it mean that once you hit this FI number, are you going to walk away from a job that you don't like? Are you finally going to start that side hustle that you have always been dreaming on? And are you going to finally travel to a place where you have to take so many days of leave and previously you couldn't do that because you do not have annual leaves enough for your vacation? So I think it's really very important to at least anchor yourself to a number, keep yourself accountable, okay? Be it like 1 million or $500,000, okay? The number doesn't matter. What is most important is that you have a clear goal and you announce this goal to your friends and family or even social media. So you will keep yourself accountable because you have set the goal. And if you fail that goal, it's on you. It's not on anybody. Please don't blame anyone else. All right. So that is what I really feel that instead of just looking at the magic number, know what is the number for and why is that number important to you.
Thank you. So when we talk about financial independence, I think there's one important factor, which is investing. Because we not only need to be able to save, to grow our wealth, we also need to actually learn how to grow our wealth through investing, the compounding effect. Calvin, you actually are able to actually break down investing into very simple concepts. What's your investment philosophy and what's your approach to achieve financial independence through investing?
Actually, I've done all kinds of investing lah, and I've lost a lot of money. But I've done like Singapore dividend stocks, US stocks. I've go all into stocks before finally going into ETFs. So I realized that for most people, you just have to go just broad-based ETFs, where you just invest in the entire world. You don't have to pick any country, you don't have to pick any company, any sector, because the broad-based ETF itself will have already solved your problem. You are investing in the top companies, you are investing in the uprising companies, and so on. But I feel that for investing, it is just a small part of the whole equation, because investing is just one part. So the other part is to save as much as you can, which means not having lifestyle inflation. So when your pay goes up, you keep your expenses the same. Then the third part, which is actually the more important part as compared to investing, which is having the ability to earn more money. So for example, if you are able to increase your pay by $1,000 every month, which that means a $12,000 profit from your boss. Not really a profit because you are actually exchanging your life with your boss. But it's still additional money that you can take and invest and grow your wealth. So you have to combine all these three. So it's not just investing, you have to combine it with savings and earning power.
Yeah. Then what about Karen? Because when we come to actually investing, what is your advice to investors? Because yourself is actually a professional trader, how can actually investors actually start off with investing?
So if you're in your early 20s, a lot of people, they like to rush the whole entire process, right? So a lot of people, as a result, they have a lot of unrealistic expectations. They want to get rich quick. So if you're in your 20s, 30s, what you need to focus on is learn as much as you can, which is what a lot of investors are not willing to do. And the second thing is you got to focus on accumulation of capital. I'm sure one of our panels will talk about side hustle later on. Accumulation of capital so that once you start investing, your money will be able to work harder for you, okay? So as you get older, 40s, 50s, 60s, you focus on capital preservation, whereas if you are still young, just be patient, focus on learning as much as you can, find a great mentor, invest in yourself, and you have your money compound in the long term and have your money work hard for you.
Yeah, so talking about side hustle, so during our panel briefing, Chris was sharing with us, focus on not just managing our own money, but also find what you want in life. So Chris, you want to share a bit more about this?
What do you want in life? Some people just want to enjoy life, right? Like
all of us want to do that.
Everyone wants to enjoy life, but the truth is, very few people are really happy with their life. So to speak, right? So you want to craft a life that you can really enjoy. I think it's not about not working, right? It's about finding work where you find purpose, okay? Like just my YouTube channel alone. I started this YouTube channel as a side hustle back then in 2021. I was still in my corporate job. Why I started it was because during COVID, we have no ways to express ourselves. Like my presentation skills without speaking to other people would just very cui, very cui. Yeah, so I have to go to YouTube and talk to myself in front of the camera to improve my speaking skills and presentation skills. Yeah, so back then it was really like just trying to explore what topics catches on with the audience, and just naturally personal finance became part of it. And the side hustle to everyone may be very different. Some of it may be related to your job. Some of it may not even be totally related to your job. Like you just, because of the similar skills, right, you don't want to touch it after work. Okay, for example, you are a graphic designer by day. Then at night, you help people design websites. Some of you may not like that. So it's very important to discover. Maybe there is something that complements it. Okay, for example, if you are working in an advertising industry or media industry, then is it okay if you start creating content around helping people, teaching people, educating people, like how to build their own skills and social media profile? Yeah, all this is really, back then the ideas are very limited, but now with AI and tech, there are more things to play with. So it's very important to discover what can really help you build something outside of the job. Okay, because I'm sure you all know by now that if you just depend on your single day corporate job, it's going to be very dangerous. It's not that we are advocating this hustle culture and whatnot, but really, if you don't discover something else outside work, then life will be very difficult for you or in the upcoming years with all that stuff. Yeah, so very importantly, discover what is your passion, your interest, your skills outside of work. All right, so that's the takeaway that I want everyone to have.
Yeah, thanks, Chris. Talking about, finding what you like, Dawn, you actually mentioned about being in control of your finances is empowering. And that's why you also written a book. And maybe you can share a bit more, because I think when I look at your Instagram and all, you talk about, having a passive income portfolio. So how does it work for investors like all of us over here?
So passive income is not really a secret. I think for all of you guys here, since we're in Singapore, and the panel before this was great, the Singapore markets are honestly a really good place to earn dividends. And I wanted to share this story, which you can also read about more in details in my book. But when I first started, I think everyone here, if you guys look at the dividend market right now, you're going to find yields of 4 to 5%, right? And it doesn't seem very attractive. You'll be like, oh, I need a huge capital. Then that 4 to 5% becomes meaningful. Now, I understand because I was once in that same position. Okay? When I first started investing over a decade ago, I too entered a lot of those stocks at 4 to 5%, or actually 3 to 4%, because that was the era of lower interest rates. Okay? But the key thing that most of us miss, and I think honestly, if someone had told me this back then, I wouldn't have believed it either, but this is something that as you walk that journey, you realize that these 4 to 5% will grow. So the stock that when I entered was at 3 to 4%, now those same stocks are giving me 12 to 15%. And that is huge. Now, I did not do anything other than holding on to those shares and reviewing them on an annual basis, whether or not I should hold or sell. And when you look at it, that growth has just been phenomenal, because you will always, if you can enter any stock now at 12 to 15%, highly likely it's either a scam, okay, or the company is dying. That's why the share price dropped. The yield is always historical, right? So it looks like you're getting a really good deal. But then when the share price drops further, you incur huge capital losses. They start cutting dividends because the company is no longer sustainable, and you lose money. That is the wrong way to invest. What most people fail to see is the opposite direction. When you go into companies and you really do your fundamental analysis right, you identify companies with strong growing margins and economic moat, and then you just let time work out the rest of it for yourself. So that's actually my own personal experience. And to give some numbers in context, last year when I was calculating my dividends between May to June, I collected about $2,000 plus. This year, in the same exact time frame, that almost tripled. And I barely did anything else. What caused that increase? Well, one of the stocks which most of you would know is DBS. So, the CEO, Piyush Gupta and Shushan Wong has actually been doing all of that work for me. I didn't do anything. Right? And there were other stocks in Singapore market that have done the same, they have grown. So for anyone looking for passive income, I would really say don't underestimate the Singapore stock market, because it's so common that we look only to the US. We look overseas, but we forget that actually our home market is a really good place for these dividends. If you look at my YouTube channel, I have this video where I interviewed a Singaporean investor. He has not worked for a really long time because his dividends are enough to feed him and his entire family, and even pay for his law school degree, which we all know is not cheap. So there you go, dividends and passive income is really not a dream.
So talking about passive income, you also mentioned about whether people should buy, hold, or sell. In today's market condition, I think this year is really a roller coaster ride. It went up, then because of our tariff situation, market actually plunged, and now it recovered again. The S&P 500 is seeing an all-time high. Yesterday there was a slight correction, but what should investors do? Maybe Kelvin, you can share with us. Should investors at this point of time buy, hold, or sell? You mentioned that new investors can start off with index investing. What should they do now?
Actually, picking stocks is the easy part about investing. You just find good stocks, invest into it, or if you are bad at picking stocks, just go into ETF, index investing, and just go with it. But the hardest part about investing is actually to stay invested. So if you look at the US markets, over the past 100 years, 70% of the years are positive, while the 30% are negative. But for most investors, they will try to avoid the negative years, which is the 30% part, but they end up underperforming the market over the long term. So over the past 20 years, the market has delivered about 10%, 8 to 10% on average, but the average investor only got about 3% on average return. So being smart in investing is not the important part. So if you rewind back in time, there's this guy, Isaac Newton, who discovered gravity. He actually lost money in a huge stock crash. And he said that I could calculate the motion of the heavenly bodies, but I can't calculate the madness of people. So what? So the smartest thing about investing is actually to realize that you yourself are the biggest threat to your financial goals. And so to do well in investing is actually, you just have to not do anything at all. You just take an average amount of money, you average into the market, get an average return, and just let time do everything, which is compounding. And the return that you will get is far from average.
So speaking of compounding and also investing, Karen, actually I saw from one of your videos, you mentioned, don't focus too much on the win rate. Focus on the risk to reward ratio. What's your advice to the audience here? Because we saw a lot of high growth stocks that are really showing us exponential growth. But should we actually buy into these stocks?
Now, the thing is, if you study some of the top investors in the world, Benjamin Graham, Warren Buffett, Peter Lynch, Philip Fisher, you realize that they all have different strategies, right? But then they all have one thing in common. All these top investors, in fact, if you read this book called Dando Investor by this author called Monish Pabrai, okay? They all have one thing in common. They would invest in such a way that when they win, their upside is very big. But when they lose very little.
And how did they do that?
Okay, so the thing about investing in the safe way, but at the same time giving you reasonable returns, in fact above market returns, is to have a good margin of safety. And what is a good margin of safety? Minimum 50%. Now, you realize that way too many people, they buy into what kind of stocks? Meme stocks. And stocks based on recommendation from a random taxi uncle, for example. Okay? Hey, buy this stock, hey, buy this stock. Then they go and buy. And then they follow the crowd. If you want to be the top 10% of investors, you gotta do it the opposite way. When other people are not buying, when markets are crashing, just now Kevin mentioned, the hardest thing to do when the market crashes is holding on to it. Here's where you come in and buy at the market low, meaning the S&P 500 low. Okay? And this is how you can beat all the investors in the long term. Now, I've talked to this hedge fund manager in Malaysia. He's the top performing hedge fund manager in Malaysia for many years. And people keep asking, what is your secret? What is your secret? I just buy when the market crashes, when everybody is panic selling. So the next time the market crashes again, remember this, hold on to it, and the markets will reward you in the long term.
Thank you, Karen. So maybe the next 15 minutes, we'll open to the floor for Q&A. So there's a QR code over here. Please scan and type in your question. So I've already seen some of the questions. So speaking about, selling, we have actually one participant or audience over here who mentioned that he has actually lost money because of stock investing. And to him, he felt that he has actually lost financial independence. What should he do? Should he actually continue to invest because he has already burned a hole in his pocket? Maybe, I think, since Dawn, do you want to take this question?
Yeah, I can take this question. So whoever you are, I'll just like to encourage you because you probably are still ahead in the sense that you have many years ahead of you. And I wanted to share this interesting statistic which I recently posted. So if you guys would like to see the graphic version of it, you can head over to my Instagram. It's the first post where I share about how if, let's say, someone starts at age 25 and you invest just $310 a month, you can actually retire in 40 years at age 65 with $1 million. Now, what if, let's say, you are at age 45? Okay, let's say, for instance, you have lost it all in the stock market. The first thing you need to do is review to find out why did you lose those money, what were the mistakes you made, and what are the lessons you can learn to improve and avoid that happening again. Then the second thing is, if we look at the age 45, if you are now able to invest $1,750 a month, you're actually still going to be able to reach the same finishing line at age 65 as that person who started at 25. And to add that on, if you, let's say, invested only between 25 and 45, and then when you're 45, the stock market crashes, and you cannot take that emotional loss, but like what Kelvin said, you just hold on, okay? You don't sell. I just don't open my account, don't want to see a sea of red anymore. Let me just go off and do something else. Come back to this as a bonus many years later. Well, surprise. At age 65, same thing, you would also end up at the same finishing line of $1 million. So whoever you are who asked this question, I would say, how many more years ahead do you have? Today, most of us actually live until really, really long, right? Age 90, 100. Malaysia's Prime Minister just had his 100th birthday, and he's still so healthy. I think it's quite likely that maybe all of us here on this panel hopefully will hit 100 too. It's very possible that as Singapore grows and advances, we're going to live a lot longer. So if you're 60 years old today and you have some money, that's still 40 years ahead of you. Now, you might not be able to take the risk, but it's going to be, can you see it's the same as starting at age 25 and then retiring at 65 with 1 million? If you're 65 now, you can do that same 310 a month, you can still get there. So the question is, what are you going to do now that you know this information? Are you going to give up, lose hope, and then I'm going to swear off investing, and I'm just going to slog at my job, every year beg my boss for a raise, pray that I won't get laid off when they restructure the team, and leave your financial fate to someone else? Or are you going to take back control and restart your journey because you know you can still do it? I hope that gives you guys something to think about.
I think the audience today really wants to take control. And we have a question here asking, maybe Chris, you can take this question. What basic skill sets do I need to learn to pick good investments that will grow over time, like one Don has mentioned, having this compounding effect?
The most basic skill set, not what other mentioned, is the Tahan ability. Okay, quote from Mr. Lu, right? Okay, Tahan ability means what? Tahan means to endure, right? Because if you think about it, if you keep chasing high returns, you can enjoy the highs. But what happens during a market crash like 2020, 2022, or even this year, the start of the year to date? If we look at April, Liberation Day, or Trump tariff and all its fiasco stuff, you realize that many people cannot hold on to their positions. Why? Because they think that they can time the market, right? They think that by exiting at a certain time, they are sure to buy back. And because some of them cannot just keep looking at red color losses on their portfolio, they just exit to really take themselves away from the stress. So the real skill is to be tolerant, the tolerance ability, and be able to stomach all these unrealized losses. Because over time, you realize that there are some investing skill sets that you can employ, and some of it that does not fit you. For example, okay, some of you are very interested in options trading, right? You have seen all these options traders make like super good money. They're selling cash secured puts, selling covered calls, and whatever bull put spreads, bear put spreads that they have. And it's very enticing, right, to see that they can earn a few $1,000s in just a few clicks. But if you take it on and realize that it's not for you and it's not aligned with what values that you have and whatever strategies that you have, you're not going to execute in the same level. And take, for example, some people may enjoy ETF investing. Some of you enjoy picking your own stocks. Okay, there's no right or wrong answer on which stocks or which strategy is better. Only one that keeps you investing in the market. Why I say that is because I've been through a lot of trading, investing strategies, and I found what was suitable for me. And the best one is the one that you do not sell your positions away in fear. And this is why I practice ETF index funds investing, because I know even in very red days, I can still hold on, I can still tahan, I can still tolerate the pain, because in the long term, this is going to trend up. If I want to pick individual stocks, then I better have super high conviction that even though the stock is going to fall 50%, I can still hold on to it. But am I confident myself in doing it? Maybe, maybe not. That answer depends on how good your conviction is, right? So to me, the basic skill set is really to have the tolerance, to have the tahanability, okay? Please keep invested, and if you really don't have the conviction to hold on, maybe you need to discover other methods that can keep you invested for the long term.
Yeah, speaking about tahanability, right? Maybe Kelvin, you want to take the next question. A lot of people are asking about, investing in the US stock market. But like what I've mentioned just now, Trump tariff is so temperamental. And how do we know which sectors to buy? I think we look at in terms of the best performing sectors in first half versus second half. They are all just switching around. It's just like it's a merry-go-round. And how do we know which are the sectors to look out for and which are the companies that we should look out for?
I think one popular way for most investors is when they are new to investing is that they will just go for the top stocks, which over the past 2-3 years, it was the Magnificent Seven stocks. So you have your Nvidia, your Microsoft, Amazon, Tesla even. But if you look back in history over 100 years, you will see that these stocks will rotate in and out. So no top stocks will stay top forever. So for now, the tech stocks take about 30% or even 40% of the S&P 500. But if you look way back to like 1900s, when the US was booming, the top sector was actually railroads. It took about 50% of the entire US market. And if you back then, if you ask people who invested in the railroads, whether railroads will still be dominant 20, 30 years later, they will laugh at you because they will think that it will still be dominant. So I think tech is actually in the same stage right now, where even though it's dominating, 20 to 30 years later, it might not be dominating. Maybe 30 years later, it will be like healthcare because of aging population, there's more illness, there's breakthrough in DNA, CRISPR, whatever. So rather than going into single stocks or even single sectors, or even single countries, because people say US now has that exceptionalism and whatnot. But again, if you look back at 1900s, the top country was actually Britain. It was about like 15 to 20%. Then into the 1960s to 1970s, the top country was actually Japan before their bubble burst. Then after that, it was the US around right after the 2000-2008 era. That's when their tech companies all start to take off. So right now we are in this stage where tech companies are leading the way, US companies are leading the way, but we do not know where the world will be 20 to 30 years from now. That's why, like for Chris, he set up for ETF index investing, where we don't even have to care what we are investing. We just plug our money into the ETF and let the ETF do its own thing automatically. It will just rearrange the sectors as it goes up, goes down, the countries goes up, goes down. So everything is done for you passively. So for me, it's broad-based investing.
Yeah, maybe Karen, you want to add on?
I think the panel mentioned about this very special word called Tahan, T-A-H-A-N. How do you spell? Tahanability, meaning the ability to hold on to your stocks, good stocks, by the way, good stocks during a market downturn. Now, easier said than done, right? Because during a market downturn, let's say 2020, everybody is panicking. Every single person you know is panicking. Even the news is telling you, oh no, the market is going to go down further and further and further. Even the experts are telling you, we are in the darkest times ever. So be careful when you hold stocks. When you listen to all this news, you'll be tempted to, what? Panic sell, right? Now here's the thing. Here's a very simple strategy to prevent you from panic selling, and that is buying proven dividend blue chip stocks. Now, how do you pick all these proven stocks? 3 criteria. First one, dividend yields minimum 4%. Second one, has to pay out consistent dividends for the past 5 years minimum. Third, payout ratio has to be less than 80%. And this company has to have strong financial statements, strong economic moat, and has been proven to themselves that they can sustain the past many recessions. Now, when you have stocks like these, which are defensive blue chip dividend stocks, it will continue to pay you dividends even when times are bad. So this will give you the confidence to hold on to it. Because if your stocks are giving you dividends during down times, your stock is telling you, you know what, I got this, hold on to me. Okay, so make sure you pick all these stocks, have them in your portfolio, and you'll be able to hold them when everybody is panic selling.
I know that we are MooFest's favorite panel. We have received a lot of questions, but we're left with 2 minutes. So maybe as we wrap up, maybe let's, all the panelists actually, if you can go back in time, give your younger self a piece of advice about money or financial independence. What would it be? One sentence. Let's start from Chris.
Focus on your active income first before your passive income. Because I know that a lot of you are very interested in passive income and all, but it only becomes substantial after you have built that capital from your active income. All right? So some people treat investing like their active income, but it should be the other way around, right? Your active income is the one that's going to build your capital. That capital, in turns, build your passive income. Don't get the order wrong, okay? Don't make your day job the passive income and then you're investing the active income. Get the priorities right first.
Don?
Learn when your capital is still small and you're in your younger years. Reason being, you will make mistakes because everyone's investing journey is personal, right? It's better to make those mistakes and pay the stock market tuition fee when it's cheaper. If you wait until you have 100K, $1 million, then you invest, you're actually going to pay 6 digits easily for your mistake versus, say, a few hundred or few thousands.
Wow, 6 digits. Calvin?
If I can turn back time, buy Bitcoin. Just kidding. I think like what Chris said, right? A lot of people make investing their main focus. It's like every day in my chat group, it's like people say, oh, this stock went up 8%, 10%. Why I never buy? But actually, when they could have earned a lot more money by focusing on what they are actually good at, which is their day job. So if you ask your boss for even 5% pay, if you change your job, maybe 10% increase, that's a lot of increment. And it compounds over time, right? Your pay will just keep increasing over the years. So I think focus on your day job and the rest will take care of itself.
Karen?
I think the best thing you can do to shortcut your investing learning journey is to find somebody who is better than you to teach you and to show you the steps, step by step. Don't need to invest in an expensive course. You just find a good mentor who is willing to handhold you, guide you, and then you can shortcut your whole entire investing learning journey.
So, and for our audience, take this as a cue to reflect on your own progress. Financial independence, there's no one-size-fits-all. So it's not a straight line. Thank you very much for our panelists for sharing with us your interesting journey. And I hope it has actually inspired you. Thank you.